Recording. Okay, good evening, everyone. Welcome to our weekly market overview, where we take a look at the market and how it's been doing, and try to get a grip on where we can anticipate price movements heading towards. Um, Quick disclaimer: anything seen in this video is not financial advice; it's merely for educational purposes. And with that, let's get started. Okay, so first thing we always look at is our weekly. You guys see this, right? Just double checking because once I pull up my drawing to it, it's usually when it starts acting up. Just if someone can confirm they see it, I would appreciate it.
I see it.
Perfect.
Yes, I see it.
All right, perfect. All right, so first thing we're gonna look at is our weekly. So last week we were looking at how we sort of had some exhaustion from the buyers here near the pretty much your all-time highs, right? So this is going to be our major trend resistance, the 608 level that we were looking at. We didn't really necessarily get there. We just had some sort of weakness from buyers towards the top. There was no real confidence to push us through there. But we did support near the 5 day. We closed just underneath it. This week we supported at the 20, which was the target last week. If you guys remember, I mentioned that now that we have the 5 day moving averages are yellow here, turning into a little bit of a resistance, just shows a little bit of exhaustion from buyers, right? It doesn't necessarily mean that sellers have taken over. It was just a clue towards maybe a further pullback happening, right? And I was mentioning last week that I wanted to see the compression between the 5 day moving average and the 20-day moving average on the daily here. So we sort of seen that briefly. We didn't get the full compression here. I'll go to the daily in a second here. You'll see we didn't actually get the full compression, but we did get the rejection at the 5 day and our 20-day turn into support, right? So now we're sitting pretty much at do or die, I think, right? So at the 20-day moving average, when we start to fail under that, I would apply caution at open. More than likely we might be near or underneath it. That's just the futures opening lower. I mean, no real significant hedging is taking place until market opens, so don't rush to a conclusion, especially if we're underneath it. But if we're under 590, which is our next major volume note here, 590. I'll mention that tomorrow if we happen to be underneath 590 or near 590, then I'll adjust my level slightly. I'll let you guys know. But as far as us gapping down at open tomorrow, we never know. It could actually start pumping up overnight, right? It's down now, but it could easily pump up once London happens, and we can actually open in the same spot that we did on Friday's close. So not trying to over exaggerate the 20-day failure, but that is one of the major things that I'm looking at right now. That 20-day failure is your do or die, right? We were mentioning last week that we wanted the 20-day to turn into support while the 5 day turned into temporary resistance. That squeeze and compression is going to give us that expensive move to the upside or to the downside, and we're sitting right there in both those scenarios, right? So the first scenario, let's look at towards the downside, right? The next magnet target is going to be the 200-day moving average, and that goes for QQQ and SPY. You're gonna see that it kind of overlaps in that sense, but that's your major volume. That this is if sellers want to aggressively start selling, our magnet is going to be the 579 area here, right? And a failure under there, maybe we can look towards that 568 area that I was looking at, which is right here, our next volume note. I was looking at that, I would say a few weeks ago, as a potential lower high on our weekly. So a lower high here won't. Here, let me go ahead and delete the drawings for a second. Let's do it in yellow. Okay. So a lower high here at this 570 570, 568 area, we can easily have a lower high here and breakout, right? I'm sure some of you remember me bringing that up, as in a 568 could be a potential lower high on our weekly structure. It would not invalidate um, any structure that we have that's bullish. We were looking and anticipating for a pullback near the 200-day moving average. It was more than likely to happen. Um, and a retest of there is really going to get you that gap fill. So we're sitting kind of in the middle of both of those things happening. So the first thing we're looking at is going to be, here's your green, your 20-day moving average. So the failure of that is going to is essentially going to confirm that the bullish short-term momentum has diminished, right? We see here we're over the 20, we're fighting with the 5, right? So but we're still trending up, right, the whole time. So now a failure under here is going to mean that the momentum for the bulls have slowed, but until we break underneath this 200-day moving average, sellers aren't going to be in control, right? They could be in control short term on the break, because if buyers have given up, most likely bears will step in to give us that push towards that 579, 580 area. Until we break that, sellers aren't going to get as aggressive on any pushes down, right? More than likely they expect a bounce there, and they would rather get a cheaper re-entry for continued downside. So that plays a part of most of our analysis day to day, right? Where I'm always mentioning the right shoulder of a head and shoulders turning into the inverse of the head of a inverse head and shoulders, meaning we have a head and shoulders, right? Looks like this. Now the completion of that could give you now the head for a right shoulder, right? So that's one thing we always look at, especially on the trends here, right? So the breakdown of our inverse head and for our head and shoulders, we'll go into the daily here to see how that looks. But essentially, the completion is going to be near that 200, but it's not out of the woods for the 200 to create that inverse, right? So how far does that inverse take us? Does it take out this right shoulder, meaning that the trend is continuing to the upside, or does it resist near the same area, right? So resistance near the same area just means it's a temporary relief bounce for some continued downside. So we're kind of sitting at the apex of that happening. We were waiting for some time now for these moving averages to start grouping up here. I know I kind of skipped over the candle structure altogether. Essentially, there's nothing major to this candle here. What I do see is, one, we're continuing to have the same back-to-back resistance, right? We have 3 weeks of continued resistance at this five, what is it, 600 area? Sorry, around the 600 area. But essentially, we have buyers being exhausted 2 weeks back to back, and we have a solid support at the 20-day moving average, right? So this is our medium to longer term trend support. And it's sitting pretty much at another large volume node, right? Which is our 590 area. That's going to be our main pivot for the week, or at least for the weekly chart as we're continuing this uptrend. So 590 is really essentially our major volume node, the do or die, right? That pushes us near the 200. Do we get the bounce, or we continue to follow through towards that 568 area, which is our next volume node right here? It looks like it's 562 because I'm kind of zoomed out, but if I zoom into this area here, you'll see it's 568, not 562. And anyways, essentially we're supporting here at this, at our 20, our major support, and we just have buyers that are exhausted near the upper bounds of our resistance here. Essentially what that means is we're stalled. That's all this candle is. It's just a stall candle, right? Buyers got exhausted, but they aren't ready to give up our longer term, our medium to long term trend here, right? They're not ready to give up that 20-day moving average just yet, right? The break of that is when sellers start to step in, and that's when the hands get exchanged, right? We go from a bullish bias to a bearish bias, at least short term. So right now we're sitting at a flat line. We're kind of, I would say, we're still overall bullish, but neutral as far as our short term trend, especially if we are sitting at this 20-day solid support at major. A major volume note, which is that 595, 590 area that we've been talking about for a while now. Um, so it's essentially it's a stall candle. That's the best thing I can kind of classify this candle, right? We have a nice wick right off of our 20, continued rejections near this upper area, right? Buyers exhausted. We rejected that area that buyers failed to continue to follow through. But we're still sitting at major support and above major volume support at this 590. So stall candle. I'm not too sure whose mic is that Michelob? You don't mind muting? I don't know if it was you. I think it was somebody else. If you mute your mic, please. Oh, it is you. I'm gonna go ahead and mute you, my friend. Apologize. All right. So let's go to the daily here for a second. Our daily candle here shows us somewhat of the rejection of the 5-day that we were talking about, right? So the last time we had some real test of the 20-day was here back in May, towards the end of the day, end of May, where we had that rejection of the 5. We had that retest near where we're attempting to retest the 200 and the 20-day around the same area here. The last time we had that resistance was there. Eventually, we had whatever news catalyst that pushed us over here back into the 5-day, and we've been hugging it for the longest time, right? It's been support, but it has not had any strong follow through, right? We're continuing to break above it and just hug it, hug it, hug it. We need some nice push away, further away from the 5-day, right? What does that mean? Something like this, right? Where we have a gap up, we're continuing to push up, and the 5 days slowly curling its way up before, what is this, 1, 2, 3, 4, 5, 6 days, almost a week passes before we catch up the 5-day. We want to see bounces like that off of the 5-day. I'm not necessarily meaning a gap like this. I just mean I want to see some price action that kind of strays away from the 5-day, meaning that there's strong bullish sentiment, right? There's a strong momentum in the upwards momentum, in the upwards direction, right? And it's separating us from our 5-day moving average. So what we have here is just kind of compression near that, right? We're struggling to maintain above. There's hesitation, I would say, is the best word for it. So we had hesitation as we're supporting at the 5 days, bunch of hesitation, no string, no major follow through, right? All we're doing is creating soft highs, I would say, right? Soft higher highs and soft higher lows. But now we have this week where we have 2 days, essentially 2 days back to back. I'm not really considering Friday as a third day, but you could consider as a soft third day, essentially rejecting that 5-day moving average, right? This is confirmed price action that is continuing to reject the 5-day moving average. We had, I think this is, what day is this? Friday, last Friday, where we pushed underneath it, we tested it. This week we're looking to see if the 20-day would follow, we would follow through to test the 20-day. We didn't get that. We ended up gapping up here and failing to hold over the 5-day. Eventually that turned into resistance. So we had kind of 2 days of a delay, right? We're looking last week for the 5-day to have this sort of continuation that we see here. But on Monday we ended up gapping up. So they kind of temporarily invalidated the follow through that we were looking for. But once we saw the 5-day no longer can maintain as a support, right? There was no confidence over the 5-day. Then it turned into resistance. And now we're at our 5-day turning into our major support, right? And this is near our 595 area. 595 and 590 area is a quick liquidity zone, right? So the bounces between there is fairly fairly quick momentum. There's enough volume in between to have us follow in one direction and then eventually die out, and the other way around. And the other way around where we're at 595 slowly curling down and then having a sharp push up, right? So they can both act as strong resistance and strong support in this area. We're sitting at that 595 area near our 200, or not 200, or 20-day moving average. So our next step here is to see, if this 20-day, if we fell under this 20-day, right? Like I said, we could be gapping down here. We might gap around this 590 area, 592. Let's do 592. So 590 is our major volume support. So say we're $1 short from yesterday or Friday's close, and we're gapping down overnight, right? We don't end up pushing up. You want to see if we get a retest of the 20. If we get a retest and rejection of the 20 and fail this 590 area, that's when the accelerated move towards this 590, 580, 579 area, which is our 200-day moving average, which is the magnet target for price action. And the failures there is where we start seeing this one gap, low volume. Our next major volume note is not down to this 568 area, as you see here. And then you can see that too just by looking at the chart. You see the gap right here. So the major thing I'm going to be looking at this week is basically assessing to see if price action starts to reject that 5-day, reject the 20-day moving average, which is our green. So if this support, our major support, turns into a resistance, and we lose our major volume note on our weekly and daily chart, which is this 590 area. This is major volume notes. See how price is kind of hugging near this area. A loss of there is surely going to give you that retest of the 200-day. So I would apply patience here. Make sure that we don't just get a look below and then recapture and come up. You want to see a look below, slight look below, and start rejecting. Then that's when you're going to get the flush, right? You don't want to quickly jump into a short when we start losing the major volume note, because price is going to gravitate towards that area for a retest most of the time. 9 times out of 10, it will retest that area. As well as all my notes that I just covered, it's in my channel, so it'll be a little bit easier for you to read if it's a lot going on the screen at once, which is what you're about to see right now, is our trends here. I'm going to go ahead and close this. All right, so for our SPY pathing here, few things. Why does it look like that? Where did this come from? Confused. This line is weird. I don't know where these lines came from. They're kind of out of order. Oh, I know what I did. Okay. Sorry, technical error. I know what I did. Settings. There we go. I'm like, whoa. There you go. Fixed. Okay, so I was looking at extended trading hours, where I've mainly focused on market hours, right? That's where the major volume is. Pre-market, post-market, there's not much volume there, so you don't really want to look at those areas as levels, and unless you're looking at it entry for the morning. That's the only time I ever look at pre-market, and I typically rarely ever look at post-market. But anyways, so looking at our pathing here for our week here, there's a few things we were looking at. So last week we were looking at our head here, right? It's sort of a double head, which is possible, right? It's a head here, looking for our shoulder to be something like this. The confirmation was the break out of this trend here near this 570, 580. I think it was 598. I don't want to, I can't remember too much what I said last week, but I knew it was the 578, essentially the break underneath this teal here, right? That was support. So we did get the break here. We had a retest. If you notice here, God, technical errors today. All right. So we had the break underneath and we had the retest rejection, and then that gave us the follow through towards the 20-day moving average. Fortunately, I didn't trade Friday. Um, but essentially this was what we were waiting for the week, right? We were waiting for the retest our major yellow trend support here. Right, it was hugging in within our 20-day moving average for some time now. We're waiting to see the failures at this overhead volume area, which is our teal here. The failures at the teal, especially a break out of this yellow trend here, right? So this yellow trend did not exist. It is just something I added now, so we'll work on that in a second here. But essentially, we were looking for the break here. We see that building out here when we have the retest towards the upper bounds here, retest near our teal here, and then we created this green trend here, which is stronger selling. As you see, price followed that selling straight down until towards the middle of the day, where we kind of hugged and bounced within the 20-day moving average. But essentially, if you were just looking for the break that we were looking at pretty much since Monday, at the beginning of the week, which was right here, so I would say the real confirmed break would have been pretty much at open. I'm looking at it, right? So at open, you wait to see how that candle settles. Next candle is still below our trend here, and that was your cue to sell to the 20-day, which was the target, and we essentially pushed it down straight towards the 20-day before we had a bounce and then kind of hugged near the 20-day until close. That's what we were looking at last week. Now this week, same thing here. I still want this the follow through because we didn't necessarily get the full follow through. If you remember last week, the head and shoulders takes place. Oh, I want to see the shoulder right here, a little bit lower. The shoulder really takes place when the 5-day, which is our yellow, right here, it's sitting right here, and our 20-day kind of converge. I want to see the 5-day cross below our 20, meaning that we have lost the current uptrend. Right where that break happens is where we may see the right shoulder of our head and shoulders, right? I prefer anytime I'm looking for an upside or a downside, I prefer the right shoulder to be a little bit higher. I mean, it could be equal, but I prefer it to be either a little bit higher or a little bit lower. In this case, I want it a little bit lower. So we had this completion here, right? This is more of this head and shoulders here, a micro head and shoulders we have here. The break follow through was the break out of our trend here into the 20-day moving average. The larger head and shoulders takes place right around here. I'm going to clear the drawings one more time. The larger head and shoulders takes place, I would say, right here. I want to see a lower right shoulder, and that essentially is going to correspond with a little bit of a push down. And I'll show you the bullish pathing here, and you'll see how it kind of flows together here. All right, so we have to push down. Our major volume note is this 590 area. If we continue to sell here, more than likely when we get to 590, we will see a bounce. So now we want to see what that bounce gives us, right? And that's where we start seeing either the right shoulder can be somewhere here, or it could be a little bit lower, essentially between our 590 and the 595 area. This is where the real liquidity right shoulder will be. And that's what's going to give us a strong push towards that 580. That's where you're going to get the $10 move, is once we build some volume here on the right shoulder above 590, but still maintaining price action under the 595, essentially continuing to have that as overhead supply. We'll see our 5-day start to curl down, while our 20-day will remain flat. That's when we're going to see the break. We're going to build that liquidity for the right shoulder, and then that will give us that push towards the 590. So I'm going to keep updating you guys on that. It's a little harder to see it now since we don't really have much price action building up just yet, since our last 4 hours of Friday was consolidation at the 20-day. So we may need to see a day or two price action to kind of look at like a more cleaner pathing. But if we're looking at the upside here, we could have something like this where, see, we have a lot of volume that took place right here where we're trapped right near the 20-day. That's a perfect area for the inverse, right? We want to see the other head. It's going to take place, our head is going to take place near the 590 area. Usually what happens is we look for a slight look below. Once we get that look below, that's when sellers begin to get confident and buyers start to lose confidence. And that's typically the most ideal scenario for a bounce. And that's where we'll see the bounce here. And the same thing I was saying before is I want to see, so the right shoulder, the head is going to be near the 590. You want to make sure it breaks out of our yellow or orange here, just as our more of a controlled selling. It's not as aggressive, just controlled for the time being. Our aggressive selling is this yellow or green channels here. So we're started to stall, as you see here, but we're still in this controlled selling. So the head's gonna take place once we kind of have a nice bottom or bounce. I would say, I wouldn't say call the bottom, but a bounce near the major volume note. And then our right shoulder is, I always look for a shoulder that's slightly higher. So I want to see a shoulder that takes place over 595, right? So something that looks like this where we recapture 595 here. And for me, the real breakout is going to happen once we reclaim 600. That's where the real breakout happens, right? So we could push up. You can look for a micro scalp right over this 595 towards the 600 area. But the real breakout is going to happen once we recapture 600. Otherwise, we have a few things to still worry about, which is our right shoulder for our inverse head and shoulders, right? We could still have the right shoulder right here. Ideally, I want to see it somewhere down here, but this would be an equal shoulder, which is still very possible. An equal shoulder right here. We had it right here. It's very possible that there was not enough liquidity here, or there was not enough of a fake out, right? So we had the bounce near the 20, which was the first target. We can have a bounce here, we can still create the shoulder right here. So that's why I'm looking for the 600 to be the breakout, because otherwise we could still have the shoulder here, right? This was the failure to complete the head and shoulders, because we did have the minor head and shoulders right here we're looking at for a breakdown. For our larger head and shoulders, this doesn't necessarily have to be the right shoulder completion. We could still have the bounce here. This will be the right shoulder completion, which is a final rejection at the 600, right? So we had this hesitation near the top. Once we get to 600, buyers are starting to get exhausted. We have one more retest of the 600 and we reject that. That's surely going to give us some stronger downside, right? And that kind of corresponds with a larger head and shoulder pattern like this, where we have a breakdown that breaks us straight down towards the 200-day moving average below, which is at the 579 area. I did post all my notes, like I said, in my channel, so that way it looks a little bit cleaner for you guys. But and as well as my note breakdown of it, so that way you guys can refer to it and possibly rewatch, so that way you understand the context a little bit better. Quickly, I'm going to go towards the QQQ pathing here. For IWM, I'm going to cut it a little short. I to be honest, I want to see one more day for IWM. I don't want to rush to conclusions for IWM. I want to see at least one more day's price action before I rush to any conclusion for IWM. But I can show you it quickly. I first just want to look at our QQQ here. Similar situation with SPY, no difference, right? We have buyers exhausted near the top. We had the 5-day turn into some resistance, and we're supporting at a major volume note right here, right? 521. Oh, 525 was our major volume note, and 521. Why is it not showing the volume for all? There it is. There you go. Now it looks cleaner. All right, so this was our major volume resistance here. Right? We were looking for this to remain as support so we can test the all-time highs. Now you see that kind of corresponds with the 5-day rejection. Our major volume areas is 521.25 area, with our 20-day being our temporary support, right? So this is where we stall and we look for the retest of the major volume note for a bounce, or we have the retest of the major volume note. Retest of the major volume note, our 20-day turns into resistance, and then we have that flush that pushes us right towards this 200-day near the 499 500 area. Similar situation I'm looking at for SPY and QQQ. The pathing is essentially exactly the same. The situations are exactly the same. Go to the daily for a second here. See, similar situation. Where pretty much it's a mirror chart at this point. No major major differences, right? We have volume that's been increasing day after day on the selling. On the weekly, we have here, right, where we have increased selling that took place near the 5-day, slight lesser selling. Essentially, we had lower volume near this week, right? We had one less day of price action, but the volume is fairly equal, so I'm not going to look towards the volume too much on the weekly. But on the daily, what I do see is increased volume here that's taking place, right? Our sell volume has yet to be taken out. We just have strong sell volume, smaller buy volume, and now we're supporting near our 20-day, and our major trend support here is at the 521. It shows 520 here, but it's 521 is our major trend support. I have all the notes there as well. Quickly, I'm just going to go through the pathing because the situation is the same. Trends are slightly different as far as our QQQ and IWM. So for QQQ, last week, the chart's gonna essentially look the same as our last week's breakdown, and it's sort of the same as yeah, it's pretty much the same as our last week's breakdown, right? We're looking for the inverse, our right shoulder here to form, right? So is this the right shoulder? Right shoulder takes place when the 5-day, and the 5-day turns into resistance, and the 20-day we lose the 20-day. Those are the exact words I mentioned last week, and it's the same thing. Same exact situation, right? So the right shoulder takes place where, right? When we have this 5-day rejection, but I want to see the 20-day failure. When the 20-day failure takes place, that's when your right shoulder will start to form. And once we get that, that's when we will have the right shoulder start to form. Failures at 521, that's going to be your clue for the formation, right? So we have a break below here, start to create some volume here above this 521. That's going to be major trend support, and we essentially create some volume here. I'm not sure what the pathing is going to look like. Only thing I'm looking at is seeing if our 5 days or 20-day starts to reject. We have maybe a little bit bounce here near major volume support. There's a lot of volume in this area near the previous shoulder here. Once that turns into the resistance, let's put it somewhere down here, right? Once that turns into some sort of resistance, we'll have the bounce here. It turns into resistance. Your clue is going to be this 521 break, 521.25 break. I don't want to rush into the short right off of the first break of it, unless there's some strong volume conviction, right? Like if we're breaking under 521 and it's following through and volume is coming down hard, 521 still stands as your confirmation for downside. But what I would prefer is to see how a bounce takes place, right? So we have some aggressive selling. If we open in on a gap down and we continue to have aggressive selling here, there's going to be a bounce, right? Price doesn't just go down nonstop, right? There is always a bounce at some point. I want to see what that bounce does, right? So when that bounce happens, does it have that rejection of the 20-day, which will give us pretty much your top of your right shoulder. Your right shoulder is going to take place right at the 20-day rejection. So first, the failure is at it. It's going to start building that liquidity. The right shoulder really takes place when that 20-day turns into some type of resistance. It rejects that area and we fail 521.25. That's going to give us that push towards the downside, which is going to give us that momentum down near this 500 area. I'm not sure if that happens this week. I got to look at the news. I'm not sure if what we have as far as news this week, but most definitely a failure at this 521.25 or a major weekly volume area is going to give us that completion of the right shoulder. So that's what I would be looking for. And as far as our upside here, exact same situation as SPY was showing earlier, right? So this is our right shoulder or left shoulder here. I want to see if we have selling that continues inside of this yellow trend here, right? We haven't seen it this week. Could be inside of this yellow trend. It could be, we could continue to sell within this teal, which is essentially still bullish control, right? If we're selling, this is controlled. Ooh, let's do blue, right? This is controlled controlled buying essentially from the buyers, right? They're controlling this. This is controlled selling from the buyers. Sorry, I am really high. Controlled selling from the buyers, and this orange here is just essentially controlled selling. Just lesser selling. There's not much volume conviction with it. We're just kind of trending down without strong convictions just yet. That's usually what the orange here is taking place. So we could continue down into this teal, or we can continue down into the orange, and that essentially will give us our head here, right? Our head's gonna happen near this 521 area. Like I said, could possibly be a little bit of a look below, right? So we have something that looks like this. There's enough volume right here to be the left shoulder, so don't underestimate this small area here, right? We have 6 hours of volume within a fixed area. That's a very strong left shoulder, right? So we want to see our inverse that takes place like this. Similar situation with SPY. I want to see the 530 here, right? So slightly different than SPY. I want to see the 530 become some type of support, right? That's when the real breakout happens. So the breakout's going to happen once we actually support near the 530, breakout over this 532, and we push towards all-time highs. I think if we can recapture 530, 532 with some significant volume, we are war with the Iran. Yeah, that could definitely, it could potentially escalate things depending on how he words it, right? War is not necessarily a good thing for the market. It's always pretty bad, but depending, it's very I guess dependent on how the market perceives it. So if we have oil prices that are running up and SPY is not falling down as hard while oil is running up, it could be a short-term pullback that leads us to just push right up, right? It's going to be a major fake out. So we'll see how that works out with the news this week. But anyways, what I'm looking for is this breakout over the 530, 532 area. I think if we break over 530, 532, we most likely will test all-time highs on QQQ. That would be the ideal situation. If we do not break and we lose under this 521 area, then like I said, this 500, 590 area, 599 is definitely our magnet as far as volume, right? Where price wants to, or basically where the bears find their target is that 200-day moving average. That's the target here, but that doesn't happen until one, we lose the 20-day and the 20-day turns into resistance, right? Because as you see here, our 20-day needs to turn into resistance to have the right shoulder for a head and shoulder, but also our 20-day could be recaptured here, right? So this is the 20-day. It can be recaptured and turn into the right shoulder for an inverse head and shoulders to move up towards towards the highs pretty much. So we'll see how that takes place this week. I'm curious. I always um remain, I would say, cautious when we start having some negative news that starts into the weekend, right? So we have the war news, and we're immediately gapping down, but I don't rush to a conclusion until Monday comes by, right? So now we gap down. Do we fill the gap and continue to fade, or do we fill the gap and Tuesday leads to another uptrend and uptrend and uptrend? And next thing you know, we're just right back to 600 on SPY, or we're right back to 530 on QQQ. No one could really judge what the market's going to do, so that's why I always like to remain cautious when we start on a downtrend, or a gap down rather, and wait for one day of actual price action, right? So Sunday, yes, there's a lot of volume in futures, there's significant volume in futures, but it's nothing compared to Monday's volume, right? Monday's gonna have your billions of dollars of volume. That's when direction starts to come through, um, based on whatever structure that develops. So that's what I'll be looking for this week here. As far as IWM, I posted the notes here. There's nothing I don't even want to really rush with anything on IWM. I think I'm probably gonna call it here and not rush to any conclusions with IWM. The only thing I will tell you is here we are in the same situation, right? But this time we have a clear rejection as opposed to SPY and QQQ, where we basically have buyers that exhausted at the top. On QQQ, we have a clear rejection at the 200-day moving average, and then our stall is taking place right here at our 20-day moving average. And if I pull up the volume notes here, let's go to the daily for a second. Our daily volume notes, this is the tricky part with IWM and why I'm a little cautious on it, waiting for it to pull up here. There you go. So the tricky thing is, right, we're sitting at a major volume area on the price, so it doesn't matter how much I zoom out. 209 is a major volume note right now. We're sitting at a major volume note. We're sitting compressed at the 20-day, at our 5-day, and we just rejected the 200. And we also see here our 50-day is starting to point upwards, meaning it's catching up, right? So if we do have a failure at the 209, more than likely this 200, 201 area is most likely the target, right, for the downside. So it's a pretty much a quick move towards the downside. There's not much major volume once we lose 205. You'll see that in my notes as well, where I say 205, the failures at 205 is going to give us that quick push towards 200. So I'm waiting to see out what happens here. We have so much compression with so many moving averages, so many there. It's like it could literally compress in either direction. I don't even want to choose one. With major volume at 209, all our major trend moving averages are all compressing in this area. Any other shorter term to medium term, or medium to longer term, right? So our longer terms are 20, has been resistance. Our medium term to long term, which is our 50, is starting to point up, meaning it wants to catch up to price action. And then our short-term trends, which is our 20 and our 5, are all sitting right at the major volume note on the weekly trend structure. There's I would say a lot of compression taking place here, and price action could easily go either direction. For IWM, to keep it short, I would say 211 needs to be recaptured and held with some volume if we want to continue towards the upside, and 205 needs to fail if we want to continue some downside towards 200. And I'll probably leave it at that. I have my notes there, so it'll go in a little bit more in depth. But I'm waiting truly for Monday to go by before I make any quick assumptions, especially with this much compression near so much volume areas.